Hey, hello everyone. So we're gonna do the exam review today. And I'm going to, we can start with the questions first. So these are I only have 5 questions this time that might be, that they will probably be in the exam. So we can do just like how we have been doing before. I'll give you around 2 to 3 minutes and then you can chat the answer. If I open Google Chrome, can you see it or can you only see the Excel?
I think I only see the Excel.
Okay. All right. So, so this first question, they will always like, feel like in most questions, they give you like a budgeted units, like, oh, they budgeted 2,500 patients, but they actually had 25,700 patients, or units or whatever. So just remember to ignore that budget unit for when it comes to the chapter 9, okay? So, so they give you the budget here in the actual, and then these like supply and laundry are variable expenses, so they give you the variable per patient, and these two are fixed expenses. So the question is, what is the spending variance for laundry? Then you can just chat, send me a private message with the answer.
Yeah. Yes, please. Only if there's enough.
Okay, let's see. Karen, do you mind explaining how you did it?
Sure. So I took the 2,700 actual patients and times that by $4 per patient for laundry. And then subtracted the actual 10,810 minus the 10,800 and got a variance of 10.
Mm-hmm. Yeah. And the reason why you don't use this 10,000 is because this is the budget, the static planning budget. So this is using the 2,500 units that they budgeted. And remember that the flexible budget, you use the standard cost, in this case are the variables, times the actual units. So that's why you multiply the 4 times the actual units. And would that be a variance that is favorable or unfavorable?
Well, they spent more, so that would be unfavorable.
Yeah, perfect. Okay, let's go to a chapter 8 question, direct material budget. So this, there will for sure be a question like this one when they give you the finished goods inventory, the beginning and ending inventory in units, and then raw materials in grams, also beginning and ending inventory. They tell you that the finished goods needs 3 grams of raw materials, and the budget itself is 500,000 units. So how much raw materials do they need to purchase? Or how many raw materials do they need to purchase in grams?
Thanks. Man.
There's like, I don't know, I like this much is split between like we talked. Everyone else.
I'll try to share the Excel here. Let's see if it works. So it says that I can't share the Excel on Zoom right now because I'm using it. So maybe for now we can just do it like this, and then for the next video call, I can share it on the tutoring resources so you can have it before the video call.
That works.
Okay, let's see, we can solve this one all together. So if they're asking for how many raw materials do they need to purchase, do you guys think that we need to do just the raw materials budget, or do we need to do more than that?
We first have to find out how many finished good units we need to make.
Right, so we need to do the production budget first, and then we need to do the raw materials budget. And the production budget comes from the sales units. So we have first the sales, which is 500,000 units. And then we're going to add the desired ending inventory. And they gave it to us, ending inventory in finished goods and units is 8,400. So we add those together. And then we will subtract the beginning inventory, which is the 6,300. So production needs, it's this one minus this one. Okay, so this is just the production budget. Now the raw materials budget. We start with the production units. This one right here, the last one from the production budget. And then we need to make these units into grams, because we're talking about raw materials. So in grams, because it needs 3 grams per unit, we're going to multiply this times 3. Okay, and then now it's gonna be similar to the production budget. We're going to add the desired ending inventory and then subtract the beginning inventory. And then what is the desired ending inventory for raw materials?
But the 92,000?
Yeah, awesome. So 92,000, we add them together, and then we will subtract the 1,000 grams of beginning inventory. And that will give us the answer. If they would say, like if the question would ask the price for these raw materials needs, and let's say it's $10 per gram, then we will multiply the grams times the cost to know how much that's going to cost for the total raw materials needed. Okay. Any questions about this one?
No.
All right. There will be a net income question. Yeah, like this one. So they will give you like 3 months, I think, maybe 2, I don't know, and the budgeted sales for each month. Then they will say the percentages of collections, like in this one is 70% collections in the month of sale, 28% in the next month, and then 2% is uncollectible. The cost of goods sold is 65% of sales. And there are other monthly expenses of 30,000 and monthly depreciation of 28,500. So try to calculate the net income for only February. And not all the information will go for the net income. Just so you know.
Probably bad when I didn't even know how to set this up, start this.
Okay, one thing is that these collections, these are important for the master budget, but not for the net income. Only the 2% uncollectible. So you're going to need basically everything except for these percentages.
Gross margin, expenses. Okay, so you need to, for February. Cost of goods sold.
When haven't checked the time, but okay, we can do this one together again. So for net income, we need the net income statement. And what is the first thing that goes in the income statement?
Sales.
Right, sales, and then cost of goods sold, and then we get gross margin. So because they're only,
Be the 4,700, right? Because what you're doing just for February?
yeah, only for February. So we only need this for 70,000. Yeah, Brandon and Karen, you got the right answer. Okay, so then we get the cost of goods sold, that is sales, 65% of sales. We just need to subtract these two. And again, we don't need these collections percentages because this will be in the collection schedule, not for the net income. But this 2% uncollectible is going to be a loss. So that will be in the net income as bad debt. So 2% of sales. We will also add the other expenses, like other monthly expenses and depreciation. And
So, so why would we not? I mean, we're only collecting 70% of the 470 in sales in February, aren't we, according to the collections?
yeah, so in February, they're only going to get the 70% of February and the 28% will be in March. But it's not in the net income because the net income statement has the revenue like accrued. I don't know if you remember that from financial accounting. So you get like, you just write down all the revenue from those sales in the net income. And then in the
So-
collections schedules, you divide it in the percentages.
So even though it's not all received, because that's based off of history, right? This is usually what we get of what we sell. That's the budgeted sales, the projection, not what we're actually. Okay, I understand.
Yeah, perfect. So now we just need to subtract these three expenses from the gross margin. And this is the net income. And I'm pretty sure there are like 2 questions similar to this one in the exam. So just remember that all this information about collections or other information, they're not important. Just try to remember to find the sales, the cost of goods sold, and expenses. Okay. So this one is a variance, chapter 9. There's direct labor standard hours is 0.4 hours per unit. Direct labor standard rate is $20 per hour. And the actual production is 50,000 units, 18,000 hours, and 370,000 actual cost. So what is the labor efficiency variance? Okay, Brendan, how do you do it?
Okay, the way I do it is I always set up the chart so it's easy to see. So you take your actual quantity, well, which is in this case hours. You times that by your standard price, which is $20 an hour. And that gives you $360,000 or whatever, 360,000 for that side. I mean, on your
Sorry,
actual
so
side.
you say actual hours or I mean actual rate or standard rate?
You do your standard rate times your actual hours.
Oh, okay.
No, yes. Yeah, standard rate times your actual hours. Sorry. And
Mhm.
then on your other side, you do your standard units times your standard hours per unit, which is 0.4.
Mhm.
And the reason for that is because it doesn't take a whole hour to do one unit. So it only takes 0.4 of an hour. So then you would times that by your standard rate.
So do you multiply the 0.4 times the 50,000 units?
Yes, sorry.
Okay. I don't know if you said it.
I did it in a convoluted way.
And now you multiply these two.
Yep.
Yeah.
Then you subtract your standard from your actual. That gives you 40,000, and that's gonna be favorable because your actual was less than your standard or projected.
Mm-hmm. Yeah.
Wait, could you back up and tell me how you got the standard hours again, please?
Yeah, your standard hours. So it's 50,000 units you made, but it only took you 0.4 out of an hour per unit. So you take your 50,000 times that by 0.4 of an hour. And then you times that, once you get that number, you times that by your $20 an hour.
So the thing is that with standard hours or standard quantity, they usually will give you only the standard hours or quantity per unit, but we need to find the total hours or quantity for the total actual units. So that's why we have to multiply it. And then it's favorable because the actual is less than the standard. We can also see in the hours that they spent 18,000 hours when the standard was 20,000. So it was favorable. Good job.
Sorry, I have a question. I see the actual hours is 370,000.
Mhm.
The actual hours, the actual cost. So
Yeah, that's the actual cost.
the thing is like on the other side it says 360. So that confuses me.
Well,
Yeah.
we're not finding cost here. We're trying to find the efficiency. So that number, you just ignore your 370 on this, your 370,000 on this question.
Mm-hmm. Unless you needed the rate variance, which is the first column and the second column, then we do actual hours, actual rate. They gave you the actual hours of 18,000, but this 370,000 is the actual cost. When it says cost, it's already these totals right here. So this one.
Okay, thank you.
And if you want to, or if you need to find the actual rate, then you can divide this one and this one to get $20.55 per hour.
Okay.
How did we get the standard hours on the right hand side again?
So this third column, it's helpful if you remember, like the third column of the standards is the flexible budget. So remember that the flexible budget is all the standards times the actual units. So you multiply the standard hours per unit times the actual units that they sold, 50,000. And then you get the 20,000. And then if they would ask for the rate variance, we would do this one minus 370,000, and it's unfavorable because they spent more than the second column.
And you said it's the 40,000 favorable because,
Because this is actual hours, standard hours, and these both two columns have a standard rate. So we're only looking at the difference of the hours, 18,000 and 20,000, because they use less hours than they should have. That's why it's favorable. And that's the efficiency variance.
So just think of it this way, if you don't mind me injecting, Natalia. Just imagine it this way: if you're a business owner and you're going to do this project and it comes in under budget, your under budget would be $40,000 under budget what you projected. So your budget was for 400,000, but you actually come in at 360,000. You
Wow.
actually saved money that way.
so it's always, if the middle part is less, like the middle section. That's how I'm seeing it. The middle section, actual hours and standard rate, if that comes down less than the standard hours, standard rate, then it's better.
Yeah, because you're looking at your actual versus what you budgeted for.
Mhm.
Okay, gotcha. Thank you. That makes more sense.
Thanks for letting me interject, Natalia.
Yeah, thank you. Okay, now we're gonna do the last question. For this one, we can just do it. I'm not gonna give you time to do it. This, in my opinion, is the hardest question in the exam, but it's actually not that hard to you once you know how to do it and like what information is useful. But the first time that I saw this question, if I wouldn't have prepared for it, and if I would have seen it in the exam for the first time, I would have just guessed it because I had no idea. So they say that they give you the sales budget for 3 months, November, December, January. The collections are expected to be 70% in the month of sale, 27% in the following month, and 3% uncollectible. So it's pretty similar to this one, just that they give you more information in this one. The cost of goods sold is 65% of sales. The company desires to have an ending merchandise inventory equal to 80% of the following months. Cost of goods sold. Payment for merchandise is made in the month following the purchase. Other monthly expenses to be paid in cash are 22,000. Monthly depreciation is 20,000. Ignore taxes. They give you the balance sheet of October, the end of October, and they ask you what are the retained earnings at the end of December. So it's like, so what we can go and check for every point. Retained earnings. So for retained earnings, does anyone remember the formula to know the retained earnings at the end of a month? Or just the formula for retained earnings?
Isn't it beginning retained earnings plus net income equals ending retained earnings?
Yeah, that's perfect.
Can
So
you
we
say that
take
again?
Sorry,
What's that?
beginning retained earnings plus net income equals ending retained earnings.
Yeah. Also, sometimes you have to subtract dividends. That's just good to know. But because in this question they don't give you dividends, that's the only thing that we need to do. We need to find the net income and add it to the beginning retained earnings, and that will equal ending retained earnings.
So, okay, hold on. So you get your beginning, you take your beginning retained earnings. And in the case that they give you, you subtract your dividends, right? Dividends.
Yeah.
And then, oh, then you add the net income.
Yeah,
then
so you first add the net income and then you subtract dividends, and that's the ending in retained earnings. So they're asking you retained earnings at the end of December. So that means the beginning retained earnings that we have right here in this balance sheet is October 31st. And because we need to find the retained earnings for December, we need to find the net income of November and December, both of the two net incomes. So we can do a net income statement for those 2 months, November and December. Okay, again, what is the first thing in the net income?
Sales.
So goods sold and gross margin. Okay. Now, if we look at the second point, collections are expected to be 70%, 27%, the next 23% uncollectible. What is the important information in this point?
The uncollectibles.
Yeah, because it's a loss. Then the cost of goods sold, of course, is going to be important. The companies are to have an ending merchandise inventory equal to 80% of the following month's cost of goods sold. Is this important for the net income?
No.
No.
Right. When I, like, if you see this, the first thing that I thought was, oh, I'll have to do the whole master budget, because like they're giving you information for the master budget, but it's not important for the net income. Other monthly expenses, is that important?
That's other expenses, right? So wouldn't you less that?
Yeah, we'll have to subtract that. And what about depreciation?
Yeah, you subtract that as well.
Right. Okay. So with that in mind, we will add sales in November, it's 380,000. The cost of goods sold, 65% of those sales. And then gross margin, you subtract them. Okay, so now we'll do expenses. So again, this 3% uncollectible, the name is bad debt. So we will do the 3% of sales. And now we're going to add other expenses and depreciation. So net income is the gross margin minus all these expenses. Okay, now we're going to do the same thing with December. So sales for December is 390,000. Be careful to add this 400,000 because that's for January. So 390,000.
That's exactly what I did.
Cost of goods sold again, 65, yeah, 65%. Bad debt, 3%. These other expenses are fixed costs, they'll stay the same. And then the net income. So, okay, now that we have the two net incomes, we're going to do what Nathan said. So let's do the beginning retained earnings is right here, 259,600. The net income for November.
The bad debt is 3% of sales, or
Yeah, it's 3%. All of these collections are based on the sales.
okay.
So net income for November is 79,600, and for December is 82,800. Now for the ending retained earnings, we simply have to add all these two net incomes. Oops.
Okay, hold on. You've got me lost. So you take your beginning, which they give you, and then you add your net income, which is November. And then,
Yeah.
so tell me why dividends is not the net income. Like, tell me why, explain that part to me.
Okay, yeah, this is not aligned with what I wrote here. I was just saying here that the real retained earnings formula is beginning plus net income minus dividends. But for this question, they don't give you any dividends. So we're just going to add the two net operating incomes of the 2 months, and that's it.
Okay, yeah, I was like, wait a minute, why is one a good thing and one is a bad thing?
Yeah, I know.
Okay.
So we add November and I missed December. So that's the right answer, is 422,000 retained earnings.
So you add all of those together. You take the 259 and then you add the two. So tell me why we would do the 2 months worth of net income again? Because if I looked at this, why would I know to do November and December and not just December? Like, maybe I missed that at the beginning.
Because they're asking for retained earnings at the end of December. And this balance sheet was from October 31st. So you need to add the whole month of November and the whole month of December. If it's say January, you would also have to do the net income for January and add those three incomes.
Oh, wow, that's tricky.
That's pretty tricksy.
That's tricky. These
Yeah.
little things are gonna get us. We're gonna spend 2 hours solving a problem and miss a date. Wow.
Yeah, but seriously, I think this is the hardest question in the exam. So just review it. I'm going to post this video call, and just ignore all the master budget information that they give you, like collections and the merchandise inventory, like all these percentages, except for the uncollectible. But maybe in the exam, the uncollectible won't be there, so you will just have to subtract the expenses and depreciation. This is just an example, but it's similar to the exam.
Sounds great.
Wow.
And then can you go over again what all you need to use out of the balance sheet when you're just looking at that portion of it?
For this balance sheet, the only thing that we needed was the retained earnings.
Okay.
Yeah. Yeah, none of this. Yeah, so we have like 15 more minutes. Do you guys have any other questions?
Yes. Can you go over the exam to be practiced in the tutoring resources, question number 7? For some reason, I'm not getting that.
Okay,
Thank you.
no problem. So question 7. So Lawrence, the tailings cost formula for its materials and supplies, 2,230 per month, plus $1 per vehicle for the month of November. The company planned for activity of 75 vehicles, but the actual level of activity was 25 vehicles. The actual materials and supplies for the month was 2,060. The spending variance for materials and supplies in November will be closest to. Okay, so yeah, this is important. When they ask you variances for direct materials, direct labor, or manufacturing overhead, those 3 manufacturing costs, you can use the pitchfork. But when it comes to like selling, or like the question that we saw in the beginning of the video called like laundry and supplies, where they give you a fixed and a variable, you don't really have to use the pitchfork. You just have to use the difference between the standard, that's an airplane, between the actual and the flexible budget. So if they, again, every time that they'll tell you the company planned for activity of 75 vehicles, like they budgeted these units, but they actually did these units, just ignored this budget number. That budget number is only important for the master budget for chapter 8, but for chapter 9, we only need the actual level. So we can do, we can only do the fixed and the variable. So the fixed is 2,230, and the variable, because this is the flexible budget, we do the standard, which is $1 per actual level of output. So the 25 vehicles. And then we're going to add these two. Okay, so this is the flexible budget. Total cost is 2,255. The actual, they say that it was 2,160 right here. So the spending variance is the difference between the flexible and the actual. So that means these two is 95. And it's favorable because they spent less than the flexible budget.
And can you explain one more time, Natalia, why you don't pay attention to that 75 vehicles?
Okay, yeah, so for chapter 8, we learned everything about budgets.
Mhm.
The master budget, all of that is before the month or the period happened. So this is all like standards, all of them, and estimates. And for chapter 9, we're gonna see the flexible budget and what actually happened. So you can see it like this is chapter 9, and this is chapter 8. The actual is, there's the actual units, like the actual products that they sold. And there are actual costs too. In the flexible budget, we're going to take these actual units and multiply times the standards. So in that way, we can compare how much they should have spent based on the vehicles or units that they sold, compare what they actually spent. Does it make sense?
Yeah, but why would I ignore that 75 vehicles? Why would I not put that in?
Yeah, because these 75 vehicles is what they budgeted.
Oh, okay.
And the actual was 25. So for the flexible budget, we don't care how many sales they thought they were going to sell, but we only care about the standards and what they actually sold.
Okay.
So anytime it says planned or budgeted, we just ignore.
Yeah. Mm-hmm.
Okay. Thank
And
you.
Natalia, sorry, and if they say if they bought 170,000 materials of grams, but they actually used like 160, I forgot what to do in that case.
Yeah, in that case, that's when we use, 1 second. I don't have it here. Okay, so this is the pitchfork for direct materials.
Mhm.
But when they bought units or like raw materials, but they didn't use all of them, they only used some of them, you need to make 2 of this column. Where one is actual quantity purchased and the second one is actual quantity used. So the quantity variance, you use the used, and for the price variance, you use the purchased. And it kind of makes sense because purchased, price, and then used is quantity.
Okay, sounds good. Thank you.
Okay. Yeah, what else? This is a post that I put here for like the formulas and most important things to remember for the exam. I think memorizing this diagram right here for chapter 8 makes a big difference. Especially if there are gonna be questions like what budget directly affects direct labor budget. So you know that directly is the production budget. And then if they ask you for a direct materials budget, but they only give you the sales budget, then you know, you can remember this diagram, and then you will know that, oh, I have to do a production budget and then do the direct materials budget.
Sounds good.
Yeah, and then these are more formulas. I added these formulas right here, like the price variance, quantity variance. But if you memorize the pitchfork, you don't really have to memorize these formulas. You can find out the formulas if you remember the pitchfork easily, in my opinion. And one way that you can memorize the pitchfork really easily is that you divide the 3 columns, and you know that the first one is all the actual, or it can be AQ, AP instead of HR, AR. The third one is the flexible budget, so it's ACE, ACE-R. And then the second one is the first one of the first one, so AH. And the last one of the last one is R. Now, if you see the difference of these two, the only thing that they have different is the rate. So this is the rate variance. The only thing that they have different here is the hours. So this is the efficiency variance. And the total is the spending variance. And if you want to like use just the formula for the rate variance, then you know that because they have AH in common, then the rate variance is AH. And then multiply by the difference of AR and SR. And then the efficiency variance, the only difference is the hours here, because they have the rate the same. So you do the SR multiplied by the difference of AR, AH, and SH. And just like that, you know all the formulas instead of just memorizing every single one.
That's really helpful. Thank you.
Yes. Thank you.
Do you guys have any other questions?
I think the scary part for me is, so in chapter 9, we pretty much, it's 90% this variance stuff, right? Like I would assume, like the price variance, quantity variance, spending variance for the labor, the manufacturing overhead, the quantity of materials, right? Like what, like, is there anything else in chapter 9, or is it all like variances?
Yeah, it's all variances.
Okay, in chapter 8, so what would you suggest to, like, I know we should memorize the formula, like what budget feeds into the other budget,
Yeah.
but each one of those budgets are extremely detailed. Like that seems very overwhelming to me, to even know, like, and this line goes to that line and this line goes to that. Like
Yeah.
these budgets, do you have any hints, clues, study, I don't know,
Yeah.
tactics?
What I did is, instead of memorizing every single thing, like add the desired ending inventory, blah, blah, blah. I just remember like in a more simple way. So the sales budget, I know it's just the sales unit and they will give it to you. So you don't have to memorize anything about the sales budget because that's the first information that they will give to you. The production budget and any like any budget with inventory has basically the same layout. So you start with the sales units and then you always add the ending because you want to finish with a certain amount of units, so you need to make the units for sales plus the ending balance, and then you will have a total right here, and then you will always subtract the beginning. So try to remember that first add ending, then subtract beginning.
What's that first? Oh, is it sales unit? Is that what you're saying?
Yes, sales unit.
Sales unit, add,
Yes, and sales unit is literally the sales budget. That's it.
add
you sub-
ending, subtract, beginning, I mean, backwards, and then. Okay,
It's like
And
the
then-
problem she went over. I forget which one it is with the long one.
yeah,
Yeah.
It's similar.
Yeah, that's true. So that's it for the production budget. You just add the ending, subtract the beginning. And this total right here that you will have is really important because with this number, it depends how you're going to do direct materials budget, direct labor, and manufacturing overhead. So let's see.
I have a question. Is there any income statement or something that we should memorize that we have to fill in the blank, like sales, COGS, things like that? Because in the last exams we had to fill in the blanks.
That's a good question. I don't know, but I know for sure that there are 2 net income questions, but they're basically like the questions that we just did, where you just have sales, cost of goods sold, and then you subtract the expenses, and that's it.
Okay, thank you.
So with direct materials budget, we need the production budget, so the production units that you need to make. And then for direct materials, because we're talking about materials, we need to make these units into raw materials. So they will give you like every unit will need 3 grams or something like that. So you multiply that. And remember to multiply because it's a common mistake. And then you will have the production in grams or in raw materials. Now it's going to be really similar to the production budget because we're going to add the beginning of, again, the ending inventory of raw materials. And it's usually a percentage for the next month, say 70%. So if let's say that this is 1 month, this is the second month, we also multiply this 1 times 3 to have the grams. And you need to know.
What's that P, is that a PR, PV, what is that?
This is production, so the production, but in grams.
Okay.
So if you need to find out the ending inventory for raw materials and they tell you 70% of the next month, don't multiply times the production units. You have to multiply by the grams or whatever unit it is in raw materials. That multiplied times the percentage is going to be the ending inventory for the month before. And then again, you subtract the beginning inventory. Then you will have a total. And sometimes that's it. This is the only number that they will ask you. But if they ask you in cost, and let's say 1 gram is $5, then you have to multiply this number times the dollars to have the cost of those raw materials that you'll need for that month or period. So this is pretty much like the production budget. On the ending, subtract the beginning. The only thing that you do different is that you have to multiply the units and sometimes multiply the cost.
Okay.
Okay. For direct labor budget, there's no inventory because it's just hours. So you just have the production from the production budget again. And then trying to remember, I think you just multiply like the hours that you need for one unit. So you multiply that to have the total hours. And then sometimes you'll have to multiply that times the cost per hour to get the total cost in direct labor. And that's it.
Storm.
Okay.
And for the manufacturing overhead budget, it can be similar to this one. It depends on if manufacturing overhead budget is based on direct labor hours, then this is what you have to do again. But this cost will be different than the direct labor cost. So they will give it to you as like, let's say it's $2 per direct labor hour. So you just multiply that times 2. Then the selling and administrative expenses. Just remember that this one has usually a fixed cost and a variable cost. So the fixed is a fixed cost, so it will always stay the same. But the variable, you have to multiply the variable times the sales budget. That's why the sales and the selling are directly together.
Okay.
Just multiply the variable times the sales unit, and then you add the fixed to have the total cost of the selling and administrative expenses.
Okay.
Okay, and then for the cash budget, you have a beginning cash. Is just think about it like this, where like you have like savings and then you got revenue. So you add this revenue and then you're going to subtract the expenses. So this is cash. Do you guys remember the name? Cash collections, I think. So you add them, and this is what you will have available. And then you subtract the disbursements. And this total right here is the do you remember? Is like the excess or deficiency?
Oh, efficient, yeah,
It says
excess.
excess or deficiency of
Cash
cash
available.
available over disbursements.
Okay, yeah. Yeah, so this reminds me that there will be a question like that. They will give you the beginning cash balance, the collections, and the disbursement, and they will ask you what is the excess or deficiency in the cash balance.
Okay.
And then income statement, and the balance sheet is just a normal income statement balance sheet.
Okay.
So yeah, so that's basically what I did. I also, before the exam, review the master budget again, just like to have it like more fresh before the exam. And yeah, I didn't memorize any of these formulas for chapter 9 either. I just
Yeah, because
memorized
that's
the pitchfork.
so easy. Yeah, okay.
Yeah, so really, like, these 2 chapters seem overwhelming, but I promise you that the exam will be easier than what you think. And the questions from that I showed you on this Excel are like the hardest questions. So just review them and you'll be fine.
Are there certain vocabulary terms that we need to know for this? Like ones that they're going to ask us true, false, or switch around the answers or the way that they say them?
Yeah, I heard that there are not really true or false question, or like they were different than when I took the exam, but I don't know. I feel like one that saved me was, like there was a true false question, but I don't know if it's going to be in this exam. It said the variable, the efficiency variance on manufacturing overhead tells you how efficient you were in variable overhead, and that's false because efficiency is just the difference of the hours, like the actual hours and the standard hours, but it doesn't really mean that it tells you if it was more efficient or not. But yeah, I'm pretty sure I heard that in this exam there are not really gonna be like true or false questions.
Okay, thanks.
Okay.
And the quiz was just like 10 questions, right? Do we know? I have to take the quiz now.
Yeah, it's always 10 questions. And for this exam, I think there are gonna be like 10 questions or 11 questions for each chapter. And then the last 2 questions is net income.
Nice. Just a little heads up for everybody. One thing I always do is I go through and I review the smart book for like 30 minutes before. It kind of gets the definitions in my head. So if you're looking for definitions, I would strongly recommend doing that. So,
Thank you.
and I've
Thanks.
done pretty well on the test. So that's just my little tidbit for you.
You guys take the quiz already?
I did. For me, it was hard.
Was it?
Yeah, I did. It was hard.
Oh, it's very comforting.
I thought
Yeah,
it was
no
okay once
quiz.
you got into it.
You can do it.
It's the timing thing that kills me. I run out of time every quiz I run. I usually get about 7 of the 10 done. I never get it done on time ever.
Got it.
Well, thank you for your help. This was very, very helpful. You're gonna send the recording so we can rework out these questions, right?
Yeah,
Awesome.
as long as with the Excel too.
Thank you so much.
Okay, well, good luck to everyone with the quiz and the exam too. And yeah, just know that the class will get better. The next 2 chapters are gonna be easier, and they will give you the formulas in the exam too.
Nice. We need all the help we can get. Awesome. Thank you so much.
Okay,
All
have
right,
a good
thank you.
night.
You too.
Thank you.
Bye.